welcome to the special edition of the New Yorkers. I'm Shireen Bhan and we're coming to you from the Times Square in New York. We're in conversation with Rohit Shah of TCW. He manages the small cap fund for TCW. Rohit, appreciate you joining us on the New Yorkers. Let me start by asking you about the India story. I mean, a year ago, people couldn't have enough of India. The equity markets were rallying. Now the sheen seems to have come off a little bit. People are talking about valuations and whether valuations are too stretched. How are you assessing India at this point in time?
So I think on a medium and long-term basis, India still looks great. There are very few countries which have the growth potential that India does. So I still remain very optimistic longer term. I think in the next 10 years, this is going to be one of the best, if not the best performing market anywhere in the world. I would point out small and mid caps in India as the next place to find the real big winners in our careers. The next few months, however, are going to be a bit rocky.
Okay. And that's largely on account of global factors, or do you think domestic factors?
Both. You have the Chinese economy still slowing, which is putting a lot of pressure on commodity and commodity prices. But also specific to India, I think there's the 60 years that the Congress Party has been in power has dug a very, very deep hole for India. So getting out of that hole is not going to be easy. It will take time, but we are going in the right direction.
Directionally, it seems to be that the government is at least consistent in its messaging. But if you were to specifically articulate, what are the things that infuse you about the India story in terms of the measures already taken by the government and how that then links back into the bets that you're making in the small and mid-cap space?
So I think the first thing is that if you look at all the countries in the world, India has the least amount of debt to GDP ratios, right? So you're starting off a very low leverage, financial leverage. The consumer, is not at all leveraged. The banks have a very low loan to deposit ratio, so they're not leveraged. It's true that the state-owned banks are bust, right? And but they are structurally bust anyway. I mean, in the long run, they're not going to matter in a few years. It's really a question of how do you resolve that issue. Commodity prices are very favorable for India. Oil looks like it's going to go down again, and it's not going to be an issue for this year. The other commodities are in the same direction. Copper, aluminum, you name it, everything is going down, not up. So very favorable terms of trade. But I think the most important thing is that the Indian voter has given the new government a mandate for reform. So we have gone away from the buying the vote mentality, the redistribution policies of the Congress Party where you're trying to redistribute poverty, and you're going to a job generation, lower corruption, more transparency regime in India. So I think credit specific is very good, but cyclically speaking, we are still bumbling along the bottom.
Yeah, I'll come to all of that in just a bit, but let me ask you specifically as far as the banks are concerned, because you said that state-owned banks are already bust.
Yes.
Why would you say that? Because yes, they have a capitalization problem, and yes, they do have an NPA problem, which hopefully we will see the turnaround of the economy also addressed in some measures by the government. But why would you say that state-owned banks are already bust?
So the economists have a word for this. They call it the principal agency problem.
Okay.
So you own the company, but you don't run the company. And here we have the government which owns the banks, but they don't really run the banks, or at least they don't, run it like the private sector, like say Aditya Puri does at HDFC Bank. So this is a very, service-oriented business, and the banks, the state-owned banks, are structurally not capable of doing that. They should be merged. They should be, slowly bled from, the capital should really be taken away from them.
So you're saying you should starve them of capital because the Reserve Bank governor is saying infuse capital into the banks at this point in time?
Well, that's what the Modi government seems to be doing, right? They can't kill the beast, so they're starving the beast. And I can see what Rajan is saying. As the governor, he wants the economy to recover. So in the short term, with 70% of the banking system owned by the state-owned banks, there is no other recourse but to sort of bring them to life. But they're dead, and they should be, just merged into...
Across the board, I mean, a State Bank of India, Punjab National Bank, a Bank of Baroda, you think that they're all on the verge of going bust? It doesn't seem to be that way. It doesn't reflect in their earnings, for instance. It's definitely not as far as State Bank of India is concerned.
If you look at the price to book valuations of the state-owned banks in India, they are the same price to book as the European banks at the bottom of the crisis.
Okay, so state-run banks a complete no as far as you're concerned, but you're pretty big on financials. So in the financial space, then what else are you looking at?
Oh, it's a blue ocean, right? I mean, this is, as I said, the Indian economy is very underleveraged. All you need is the right business models. So if you have the right private sector bank or a private sector non-bank financial, which has a good business model, which is where your asset book is very clean, very good. If you have something like Bajaj Finance, where
so are you more excited about the NBFCs, or are you more excited about private sector banks?
You have to be a stock picker, but I would bet on both. I think you
so what would be most exciting for you in terms of stock specifics currently?
So the well-run banks, which are on the relatively lower price side. So my personal preference is DCB Bank. It's a smaller bank. It's well below the radar of most of the foreign institutional investors and even the domestic investors. That's a great bank. City Union Bank, another great bank. Excellent asset quality. They know how to run the books. On the NBFC side, you've got companies like Bajaj Finance. Runs it clockwork, 25% loans growth. It's the easiest way to make money.
What kind of upside do you envisage for these companies, given that you believe strongly in their fundamentals?
So, let's do the numbers, right? The Indian economy grew 12% in dollar terms in the last 12 years. That was under the Congress party, and admittedly, you had a tailwind from the global economy. So 12% means in 7 years you double it, 14 years you quadruple, right? We know the banking system will grow at least that, so that's a 4 multiple right there. Then you throw in the fact that real interest rates are too high right now. They'll come down. There'll be a deepening of that. I would say you double that again. So you're looking at 8 times. Then you look at the loan to deposit ratio. It's very low right now. The Reserve Bank is going to reduce all the restrictions they put on the private banks as they begin to realize that this is the main engine of growth. So you'll get another upside from there. So you can easily get 20-25% CAGR growth for the next several years in these private banks.
So this would be your biggest bet in India at this point in time, the financial services space?
Correct. I think that's the easiest way to play it right now. I mean, if you look at the last several years, where have you made money in India, right? It's really been 4 buckets of the stock market. First has been what Indians call the IT stock. I call it a labor employment agency, because it's cash flow per employee is not changed in Infosys and TCS for several years.
Right.
I think that game is over. They need to go to a higher value add. They haven't been able to do it.
So you would stay away from Indian IT?
I think these are great companies, but in the next bull run that begins, it's not going to be IT stocks which will do the best. Pharma, Lupin, Sun Pharma, phenomenal company, brilliant management, but they have reached a valuation limit.
Okay.
I think for the next 2-3 years, it's quite possible they go nowhere, right? Then you have consumer staples, Colgate, Palmolive, and all the likes. Now, 27 million Indians are born every year. So 27 more million mouths to feed or to give a toothpaste to, right? That's not an India economic story. That's a demographic. It's just more Indians being born.
Sure.
So, and it was, I would call it an escape from India story. You're trying to escape all the problems in the Indian economy, but trying to play the India story. So that India story, as far as consumer staples is concerned, is over, I think.
Okay.
I think you need to buy the Bharat story.
Okay.
And the Bharat story would be things like, the non-bank financials, the private sector banks, the selected infrastructure story.
Okay. Within infrastructure, what do you like? Because, most of the infrastructure companies in India have gone through this phase of seeing broken balance sheets. In fact, we still haven't seen them recovering at this point in time, and that has stalled the infrastructure story in India over the last few years. So within the infrastructure space, what looks good to you?
My favorite is, actually, this is sort of a, how do I put it, a cop-out, but I like NBCC, National Building Construction Company, and it's all for the reasons you mentioned, which is like, high leverage, permit problems, working capital problems, and in the NBCC, being a government-owned company, has negative working capital, clean balance sheet, business for the next 10 years trying to rebuild the Indian government property sector. So I think that's the best way to play the infrastructure story. Container Corporation, another story where the government has a huge hand. That's a natural monopoly. You can't compete against these guys.
So you only don't like government-run banks. You like other government-owned and government-run companies.
Government natural monopolies, right? So the business is great, especially for Container Corporation. I mean, this is the company which will take India to the next level when it comes to infrastructure building.
Okay.
If you're you're the Minister of Chief Minister of Rajasthan.
Yeah.
And let's say L&T comes to you and says, I'm going to build so many container stations. Right. You'll have a suspicion. Will these guys really deliver? Can they do it? But if Container Corporation comes to you, your comfort level is much higher, right? So that's why Container Corporation has a much easier time buying land in Rajasthan, building all that infrastructure they're building.
Okay.
And in India, really, right now, it's a question of build it and they will come. And the Japanese and Koreans are coming to that corridor. So that's a natural monopoly. Their capex finishes in the next 2-3 years. So then it becomes all free cash flow.
Okay, so NBCC, Container Corporation, what else are the Make in India or Bharat plays that you're betting on, specifically in the small and mid-cap space? I can see the likes of Finolex cables on your list.
Right. So I think the easy themes are, urbanization in India, the internet in India, and what the internet sector will do in India. So I think in urbanization, they have some very easy ways to play them. And the usual favorite is Asian Paints, but I would go for the next level, which is Kajaria Ceramics, Century Plyboard.
Okay.
Those are the easy ways of playing the urbanization theme. Then there are also people also like these housing finance companies, but I think you're better off buying a diversified, financial institution rather than a very specific financial institution, because when you're betting on only one kind of business, then there's risks of regulations, and we know India is very good at destroying a good story. So that's why DCB Bank is a much better story than say any Diwan Finance or something like that.
Okay, auto ancillary. I mean, is that on your list? Are you looking at anything exciting within that space?
Yeah, as I said, there are great companies in India, right? And Eicher Motors, Motherson Sumi. These are fantastically well-run companies.
And you don't think valuation is a problem there? Because we've already seen, stocks like Eicher Motors, year to date up significantly.
Correct. And so these are quality. What do they call it? Quality at any price stocks, right? And the problem with quality.
So you would buy at these levels?
I would hesitate. I think there are easier ways of making money, but it's a safe way to play. In the sense that they're very expensive stocks. So if I was an investor, what I would do is I'd say, okay, 20% down, I'm a buyer of Eicher Motors. Okay, so you put in a bid for 20% down limit. There are the prices.
Sure.
And you put it in, and I'm sure in the next 2-3 months, you'll get your price filled.